Hey traders, welcome to another episode of Charts and Coffee. Happy Monday, everybody. All right, so let's get into it. We've got a lot going on in terms of what the markets are this morning, this Monday, March 8th, digesting in terms of what occurred over the weekend. Remember, over the weekend and every weekend that we go into either a Friday rally like we did or a Friday sell-off like we've seen, every weekend there is the potential that there's going to be the vote to get the stimulus passed. And this past weekend was it. And when that's something like that is looming over the market, it's tough to say that any move lower is going to be sustainable, knowing that there is this potential catalyst for a move higher. Now that this is done, sell-offs won't have, unless it's going to be the Federal Reserve, sell-offs won't have that, well, let's see what happens when stimulus gets passed. That's done now. So if it were a bazooka that the Fed were firing, that's it. That's it. So really interesting action we're seeing. I'm looking at the EEM right now because some of these emerging market narratives have been hit hard with the movement in rates. And I do want to get opportunistic on the likes of EEM, perhaps Brazil, some of these. But I want to remind everybody, and this is a little bit of departure from what we usually talk about, there are certain equity markets. When you look at the iShares, the MSCI iShares, there are a number of equity markets that aren't the US that are actually holding on to uptrends quite well. But remember, with the movement in bonds, what's happening? All of a sudden, someone can sit back and say, wow, I can lock in 1.5% for the next 10 years. All of a sudden, that starts to compete perhaps with some of those dividend yielding stocks, your dividend kings, your aristocrats. That starts to compete with that attention, and you'll see some flows. So I'd keep an eye also on, and that's something else that I'm looking for, is opportunistic buys. If we are seeing flows out of some of those dividend yielding stocks, again, aristocrats, kings, even some of the new aristocrats, keep an eye on some of those. Those are names that have been giving dividends now for say 5 to 10 years. Keep an eye on some of those. Also keep an eye on the XLU and the XLP, because one thing that throughout this entire sell-off, all 2 weeks of it, right? The whole thing that I've noticed, and we've talked about this before in previous episodes and also the Simpler Futures room, Simpler Options room, my Sector Secrets Mastery, is that I'm not seeing the market go into utilities. I'm not seeing them go into staples, which would really communicate that the market's sort of hiding out now, that it's hiding out in terms of defensives. So keep an eye on that one too. I think that's a pretty interesting narrative right there. All right, so that's what we've got to kick off this week, this Monday. And so let's go ahead and dive into what 1.9 trillion day has in store for us. And we'll take some questions from the live audience. And first up is from Line Watcher. How long do I think this choppiness of the market will last? Oh gosh, Line Watcher, we not only try to project levels that we will buy and sell from, support, resistance, we also are making bets on the direction. So now if I'm going to make a bet on levels, direction, and time, I think time is the most unpredictable. However, catalysts, we literally leapfrog from catalyst to catalyst. And so we've got this 1.9 trillion as a catalyst. But what's going to be the catalyst that kicks us out of this? Maybe a continuation of this, but I would say try to not put the added pressure of, well, this is going to last for this long. I find that to be really futile. And like the Borg, resistance is futile. So keep that in mind. I don't know. We're in distribution now. I know that minimally. So what are the criteria? I don't know how long it'll last. Quite frankly, nobody does, except for maybe Janet Yellen and Jerome Powell. And I wish they'd give us their S&P targets already for 2021. But what we want, in all seriousness, what we want to do is remember that by way of the tools that I use, I'd like to see the market get above the 34 period exponential moving on average on the high. That starts to plot my green grab candles. I want to see at least 6 to 10 of those in a row before I say that this distribution market that we're in has reorganized, has attracted enough bullishness to be an uptrend again. Also remember, there are some markets that just barely lost their trend, and meaning we lost the support of the 34 EMA on the low. And in those situations, if we just barely lost the trend, I'll look for the re-strengthening in those names much quicker. They're relative outperformers. That makes me think about what? Of course, financials, regional banks included. Of course, we think about energies, crude oil and RBOB gas as well. Oil stocks. We want to remember that small caps have been resilient. We know transports, industrials, and generally speaking, the Dow have been quite resilient. In terms of tech, we know that the communications, XLC, that's your Facebook, your Google. And remember, the other heavily weighted stocks within that are going to be in play as well. And those are going to be named. So XLC has been much more resilient than the absolute shellacking that the NASDAQ or the QQQ has taken. Take a look at the names that are heavily weighted within the XLC, starting with Facebook, Google, Activision, Twitter, Disney, Comcast, Netflix, Charter Communications, AT&T, Verizon, T-Mobile. Go down that list. Electronic Arts, Take-Two. Find out what the best performing individual names in that XLC are. So I think that how long it will be choppy is really going to be much more granular to the sector, to the stock as well. So thanks for the question, Line Watcher. All right. Next up is questions about XLE. So Rick, I love the XLE narrative. It's absolutely tethered to the strength in crude oil, which I believe is tethered to, first, the reflation trade that's happening. Commodities are going to continue to move higher. And of course, this is the king of commodities, crude oil, that we're really talking about as far as the connection to XLE. That also means that not only do we like XLE, we like OIH, because at these levels, oil explorers and oil services, they're going to do quite well. So OIH, XOP, keep an eye on those. It's going to be April until we see whether or not the OPEC meeting, OPEC Plus, is going to increase production, because they chose not to in this last meeting last week. And so because they did not choose to increase production, because they are not going to send more crude to the market, it's still at those status quo production cuts, limiting, right, what's reaching the market. And crude got a huge boost from that decision to kick the can to the April meeting, because we're still seeing OPEC Plus, which is, just face it, it's the Saudis and the Russians, still going back and forth as to whether or not they can agree on an increase in output. All right, so that'll be something we'll re-examine in April. But in the meanwhile, remember, the reflation trade is still in separate from the OPEC decisions. And I believe the dollar is going to re-weaken. That's going to also propel this higher. So we're starting to see reopenings. I won't dive into it now, but remember, we've done this in the past during the heaviest parts of the shutdowns. We look at the traffic data. Where traffic data picks up, demand for crude is also going to pick up. So you've got the OPEC narrative, you've got the reopening traffic narrative, and then you've got this reflation narrative. And it's hard to bet against crude, to your point, XLE, OIH, XOP. But once again, like we talked about, crack those ETFs open. Take a look at what's trading within the XLE. Now, sure, you might want to trade the XLE broadly, but you might get some opportunities as well to go inside the XLE, get a little bit more granular, and ask yourself, all right, well, what are the stocks within the XLE that I can take advantage of? Now, just heads up, as you can see here, almost 45%, actually over 45%, close to 46% of the weighting of the XLE is Exxon at almost 25%, and Chevron at almost 21%. So you know what's going to move the XLE. Phillips 66, EOG Resources, Schlumberger, Marathon, Pioneer Natural, Valero, Kinder Morgan, Williams Company. There's a lot of other names to really like in this particular group. Remember that if you start looking at Schlumberger or Halliburton, those are the two heaviest weighted stocks in the OIH. So be careful when you've got overlap between some of these, or just heads up, it might supercharge the move as well. So thanks for the question on that XLE, which again, love that crude oil trade, love that reflation trade, and this is absolutely tethered to that. All right, so by the way, we've got the Release the Kraken going on today with the mug, and we are, this is a Kona Peaberry coffee. We are rocking this morning on Charts and Coffee. So I'd keep an eye on all that. And remember that we're going into the Pitbull low week. So even though the markets are moving up, I wouldn't be surprised if we start to test some lows before we put in a Pitbull low later on this week. And that maybe, if we see a little bit of a washout in energies, that would be helpful. But there's a lot of other places to like and look. All right. So again, remember, you want to be pretty granular in terms of your list. This is one of the lists that I was working up over the weekend. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 names. 11 names that I'm going to be adding to the watch list this week in the Sector Secrets Mastery. All right. So let's take a look at also, I don't want to leave. So a lot of you might be thinking, futures, Rog? I don't trade futures. But remember that there are a number of ETF alternatives. I mean, of course, when it comes to the indices, right? We know SPY, we know DIA, QQQ, IWM. But remember that we also have the USO when it comes to crude oil. We have UGA when it comes to gasoline. So there are ways when I'm talking about some of these commodities. Again, we are in a very nice uptrend in commodities. We have long positions. So let me show you something kind of neat. On one hand, we have long positions in the ZC for swing trades in the futures room. I love swing trading futures. The end of day time frame charts is completely separate from day trading. It's completely separate from intraday. And I can just put a position in on a pullback and just take advantage of the overall trend. Now that's a futures trade, and futures traders will love playing the ZC. That's your corn futures. But then traders who are not really into futures or may not have a futures trading contract, we have CORN. Now, we're not always going to have a liquid ETF alternative. Sometimes, and in this case we do. CORN has a good options chain, good liquidity there, good open interest, good volume. And CORN, on the Sector Secrets Mastery side of what I do, is our long position there. So just like we're talking about the XLEs and the crude oils and the reflation trades and so forth, remember that we can absolutely take advantage of USO if we want to play crude oil. It's the US oil fund. And if you like the pullback in the gas, RBOB futures, you can play the UGA on the ETF side. So I love giving you guys these alternatives. All right, so next question. What are my thoughts on QQQ and RTY? Michael, I would avoid QQQ right now, get a little bit more granular, like I said before with the XLC. RTY I like, and not only do I like the RTY futures, I like the IWM ETF, and I like the KRE regionals as part of that narrative. It's been quite resilient. So here's your E-mini Russell futures contract, and here is your IWM. Remember, I mentioned if we do pierce these trends, we might want to get a little bit more granular to relative outperforming names. But keep in mind something that Charles Dow talked about as part of Dow theory many, many decades ago, 14 decades ago. It's been over a century. And one of the things that are one of his tenets of Dow theory is I paraphrase it to say, respect the trend that was. Too many traders are too quick in the environment that we saw the last week or so. They're too quick to want to short when they see weakness. They're too quick to abandon the long side of the trade, which I still believe is alive and well. And so remember, the markets are not a binary long short, or I shouldn't say long short. They are that. They're not a binary uptrend, downtrend conversation. There's an uptrend, yes, and there's downtrends, yes. But we also have distribution markets, these choppy markets that come at the end of a certain phase of a trend. It doesn't mean that it couldn't continue, right? We know that many continuation patterns, symmetrical triangles, asymmetric triangles, pennants, a lot of these times, these patterns are known as continuation patterns. So that's the uptrend going to distribution, insert pattern, and then a continuation. And it's hard to bet against the current central bank monetary policy. It's hard to globally, by the way, and it's hard to bet against this stimulus, which at some point we would anticipate should result in the greater output in terms of production and goods and services, right? So we would think in an ideal world that 1.9 trillion comes back to us in terms of increased output and productivity. We'll see. But in the meanwhile, in CHOP, regardless of the macro, you want to be aware of the relative outperformers and stick with those. And I think RTY, KRE are two of the really great ones. Question on AZO. Hey there, Alex. Yeah, that one's actually on my list. I like this one a lot. This is MarineMax. That is on the list. AZO. Do I like the pullback buy here? It's not in the wave any longer. Do I like the overall uptrend? It's a double green uptrend. 8, 13, 21, 34 are all doing their thing in terms of structure, telling me that pullbacks by the you-know-what dip, right, is absolutely valid. But how do we buy the dip? How do we buy the dip? Because dips happen, right? Dips happen. And when we get those dips in uptrends, really those are retracements. Those are pullbacks. That's a blue light special. That's a buying opportunity, right? I guess the blue light special now, fast forward from growing up in the days of Kmart blue light specials, I'm really dating myself, but you fast forward to, I guess it's lightning deals, right, on Amazon. Whatever it is, something going on sale, something getting cheap, they're not the same thing. Something going on sale where I want to buy it means it's in an uptrend. And yeah, we absolutely like this one, no doubt. Really nice respect, by the way. Not that it's impenetrable, but very nice gravitational pull along the January 1st anchored volume weighted average price. Throw that on your chart and you'll see we've spent really no time, any significant time, closing below that level. We pierced it, but almost every time that we've pierced it, it's actually resulted in an opportunity to get long. So anchor that January 1 VWAP on your chart, and you'll see that it's been actually a very good level, really good line in the sand for continuation higher in this double green environment. So thank you for the question. Next up is, do I like EWT and EWY? Yes, I do like EWT. That's one of my, in terms of strength, I've actually been long EWT in my longer term portfolios for about 7 or 8 months now. In terms of EWY, now we're going from Taiwan EWT to Japan EWY. From a technical standpoint, I don't want to, Korea. From a technical standpoint, I don't want to short EWY. I don't want to short South Korea. But you can definitely see that it doesn't have, when you pull up the EWT and you look at the trend and pull up a 34 EMA on a high, close, low as the backbone for an uptrend, you'll see that we don't quite have the same type of support. But again, a broken uptrend is not a downtrend, right? You can break a trend with one candle. You cannot make a trend with one candle. I would not call this a downtrend yet. It's trying, don't get me wrong, but until it succeeds in becoming a downtrend, this is really an oversold buying potential opportunity. So I'd keep an eye on that in that regard. All right. So that is what we've got going on right now. And we're going to wrap it up with probably one of my favorite positions at the moment, which is copper and Freeport McMoran. Yes. Freeport McMoran, Matthew, if you've checked out some of the free videos that I've cut for the Simpler Futures over at the Simpler Trading YouTube page, you can check that out there or sign up for the newsletter. And I've talked about it in Countdown Trader as well. So you can sign up for my free newsletter over at countdowntrader.com. And one of my favorite proxies for copper, if I'm going to be looking at the equity side, is not a copper ETF, but rather Freeport McMoran. So they do track beautifully, beautifully. All right, gang. So that is our Monday, March 8th episode. Thank you, as always, for joining me for these Charts and Coffee. And I'll see you tomorrow. Same time, same station. All right, gang. Be good to each other. I'll talk to you tomorrow.